It's not about the money early. It's about the experience. I really did not. I got my education by going and working for just a tyrant, but I managed a huge portfolio in Texas and Oklahoma as a young kid. I was managing $300 million worth of assets with a brand new team. That experience was invaluable. It wasn't the best job. I knew I wasn't going to be there long, but just getting that level of experience where you're working with people, you're trying to do new developments, you're trying to buy properties, dude, that accelerated my growth. And then for me, it's just education and learn.
Welcome to the Real Estate Podcast. How you guys doing, Alex? Doing good?
Doing good.
We got Mr. Jason Ricks.
Yeah, Mr. Round Rock.
Thanks for coming, man.
Yeah, man, excited to be here. Thanks for having me, guys.
So I guess if you don't mind, can you kind of just give a high level about who you are, what you have going on, and we'll just dive in with some questions.
Yeah, man. So Jason Ricks, born and raised in Austin. Man, I've been in real estate for so long now. I feel like I'm getting old. I know I'm getting some gray hairs, but it's going on year 13. Wow. And I've been really active in retail, like shopping centers specifically. And we're putting together a fund that pays monthly cash flow to investors. And it's all being done through acquisition of single tenant properties. And there's a ton of advantages on these single tenant buildings. I know, Matt, you were kind of in retail leasing for some time, so you kind of understand the nuances there. But the lease structure itself, it's so great. It's called a triple net lease. And so what it happens is they pay for the taxes and the increases, insurance, and then the maintenance on the building. So whenever you see how much the tenant is paying in rent when you go and buy one of these deals, it's very predictable on the income stream. So we like to say it's basically like buying bonds, but backed by real estate. Mm-hmm. So that's what we're doing. We're creating a fund. We've been doing this for the last year and a half. Mm-hmm. We switched off syndicating shopping centers, and the big problem that we saw is a lot of the big traditional retailers, they had so much debt. And I have this saying, if I'm going to go put my money in a deal and I'm going to go raise money from other people, I want to be able to put my mom's 401k into it. Mm-hmm. That's my test. And if I don't feel comfortable doing that, then I shouldn't be offering that to my investors. And so we pivoted off that strategy and started tailoring the fund specifically to more medical-esque buildings, right? So dialysis, which would be Fresenius, mm-hmm. or DaVita, mm-hmm. Aspen Dental, surgery centers, urgent cares, things like that. Essential businesses, so you can't get really interrupted by online. That's just, as you guys know, is really just kind of impeding sales for a lot of the traditional retailers. Mm-hmm. So that's what's going on my end. And nice. I know we've been talking over the years. We've worked together on a few syndications and tried to connect some dots for one another. Mm-hmm. And yeah, man, just something I feel really passionate about.
Yeah,
something I want to do.
And it's fun being around people that are committed to real mm-hmm. estate and have been around, because there's just so many things you can talk about. Yeah, and you've been in it for a long time and in Austin, and I have a lot of respect for. I feel like the way you go about it, you're very diligent, mm-hmm. Very analytical, and you're when we were talking, you're the way you run numbers is so opposite from me.
Totally. And
but
so that's okay.
And I know the deals you're doing are good deals. Mm-hmm. So walk us through the whole infrastructure. I mean, we've had other people do this. I think I introduced you to Ben Kogut.
Yeah, Kogut. Yeah, good friend of mine.
Somewhat similar, I guess.
Yeah.
But I know yours is different, and also with the way that you're connected with some of the crypto. Is that? Yeah,
I mean, I guess we could kind of say that it's a little unique. It's new to the market, but it's regulated. It's everything is through the SEC. So this isn't something random that's floating out there like some brand new Dogecoin or something like that. The problem that we tried to solve is really simple, and this. Whenever you invest into a private syndication, there's a lot of advantages to doing that. but your money is literally tied up.
Mm-hmm.
Like you're locked in there. So if you invest with me like a traditional syndication, I can do whatever I need to do to the property. You have no say, no control. You're along for the ride.
That's why I've never really wanted to invest in somebody else's syndication.
Bingo.
Because it's locked in 7 to 10 years.
Exactly. And you don't know how it's going to perform.
So Jason has a solution for you.
Yeah. So so we went about like, how do we solve this very fundamental problem? And the way we can do it is with this technology. I say it's a technology wrapper. It's not the driving force of the fund, but it's an opt-in. So you can choose to pursue it if you want, or you can keep it as a traditional fund. If you opt in,
Mm-hmm.
you have the potential to sell your investment or a portion of it. So let's say, for example, I invested in the fund.
Mm-hmm.
It's paying me monthly cash flow. I'm building up equity.
Mm-hmm.
And let's say I've got a major life event. Let's say I've got a major surgery, right? My shoulders and knees are all screwed up from football, and maybe my kid needs to go to private school. So I could call Matt and be like, hey, Matt, I've got $100,000 in this investment. It's paying me 7% cash on cash. Are you looking for an investment vehicle like this? And he goes, oh yeah, great. Yeah, sure. Well, I can literally sell it to Matt. I can sell a fraction of it. I can sell all of it. And so that's one of the cool features is it gives you optionality. Now, on top of that transaction, which is what we call a peer-to-peer transaction, I can put my piece of the fund on a secondary exchange. And from there, you can have bidders come and choose to buy it from you or not. And that's the cool thing is you've got multiple different options.
Yeah.
And here's the other advantage. And this is how a lot of people get confused with us with crypto. We have nothing to do with crypto. Well, we are blockchain enabled. And that's what allows us to make these trades. And so everyone gets kind of confused with blockchain. It's crypto. It's not. It's the underlying digital ledger. That's really what the blockchain is. And so one of the neat things is if you opt into the technology, you may be able to, you can choose US dollars to pay you monthly. You can choose what's called a USDC coin, which is a US stable coin, or you can put it in Ether. So you have a currency selection.
Nice.
And you literally can play around with that if you'd like.
How do the GPs? How do y'all manage? I mean, depending on how the fund is structured, say it's accredited investors only. If I wanted to sell my shares to someone who's not an accredited investor, would that affect it at all? Would I be allowed to do that? Or
this is such a good question. No one ever asked me this, and this is so cool. I think this is one of the best features of it. So you have to be accredited to buy the initial offering, but after the 1-year lockup period, I can sell it to any non-accredited, which is great, which is huge, man. And it's monthly cash flow. And this isn't like a super high risky like value add shopping center play, right? This isn't a brand new development. These are like, again, we're buying like 7-Elevens, DaVita, we're doing like Aldi's, Tractor Supply. Like these are corporations with a market cap into like the tens of hundreds of billions of dollars.
Mm-hmm.
So credit is fantastic, but the returns aren't like skyrocketing either. I'm not going to turn around a 20 IRR. That's not what we do. We see ourselves as like an alternative to the fixed income world because, man, right now look at bonds, man. Like I think the 10 years at 1.7 today.
Mm-hmm.
We've got junk bonds are under 4%. Corporate bonds are like 3%. I mean, these are negative real returns when you count for inflation. So if we can give something that's paying a cash on cash of 6 to 7%, and you're building equity every month with tenants paying that, and you get the optionality and all these benefits, we feel like that's going to unlock and totally change the way syndications are done for your exact reason.
So is it like, I get the aspect which is a huge value that it gives you optionality to buy and sell, and if there's like a lot of value that's added to the property, then you can sell it if you want to and someone else buys.
Yeah.
But like, help me understand, there's REITs out there, right? You can buy and sell public shares and have a similar concept. But I guess what I'm thinking is a REIT has so much more expenses in the corporate structure, and so it's run different than what you're doing, which is almost more like a private deal that allows the same benefits that a REIT does, but with less cost on the overall infrastructure, which most likely benefits the investors.
100%. So the way I like to say it is you get all the benefits of privatization, right? So you get a K1 distribution. I can give it depreciation. I can do accelerated depreciation through cost seg. I get interest deductions, other things passed on to the investor. And you get the liquidity optionality too from the REIT. Now the problem with the REITs, and again, I'm not anti-REIT guy.
Real quick, you can't do the cost seg on a REIT, can you? On a public REIT?
No, well, you don't get those. You don't get those benefits.
It's a publicly traded. It's just like buying a stock, right?
Yeah, you're buying the operating company, right? So, and then those dividends that you get every month are paid at ordinary tax. So there's no tax advantages. I like to use this analogy when COVID hit, right? My REIT stocks went down like 30%. And they're still down from pre-COVID highs. Well, my underlying building, like my 7-Elevens, they didn't go down in value 30%. They actually went up in value, right? So that's the difference between owning a REIT and owning a private real estate deal. Right. So my stuff actually got more expensive. We didn't drop 30% at all. So like because of that period of time, interest rates obviously fell off a cliff, right? And I'm not saying there's perfect correlation between interest rates and cap rates, but there is something there. And so we actually saw cap rates dropping for a lot of our properties that we're going to go after, which means the value of those are going up.
Right.
So
that's cool, man. That is really cool. So I definitely understand that. And now let's get into the more important thing, like the real estate, right? Like,
I mean, that's my thing. I mean, the technology stuff is awesome, but
it is.
At the end of the day, it's all about the real estate.
Yeah. And we probably should have talked about that first, but I don't think it matters because
the fun stuff is talking about the security token aspect, man. It's different.
So unique and different, which I think is really cool. And like there's a lot of people that like hear that and like you said, like it's legit. Like you have to say that, which is unfortunate because it's so different that people just don't get it.
Yeah.
You know,
and it's a this is like boring terminology, but it's a 506 C Reg D. So just like your other syndications that you see out there, I mean, it's the same structure. We just put the blockchain component on that opens up all these options. That's literally what it is.
Let's talk about the technology just a little bit.
Okay. I actually have another question on that
so this isn't, you can't possibly structure it this way without the blockchain technology, to where after 1 year I can sell, part of my shares or part of my, ownership in this fund.
No, you can. So what's cool is, I'll give you a hypothetical example. So each unit is valued at $10,000, right? Minimum investment is $50,000. So if you're a minimum investor, you get 5 units. You can sell those 5 individual units at any time. So if the market's really right for you, like let's say like 3 years from now, cap rates on our properties are like so low and it's like, oh my God, perfect time to sell. Boom, you can sell it off to someone at a premium.
You can sell 1 unit or 2 units.
Yeah, you can sell 1, 2.
I guess what he was saying is, with traditional syndications, is there a way to structure it where you can sell your interest, but it's not technically as efficient and through like the blockchain technology? Like in a normal syndication, or does the blockchain allow that?
Yeah, so the blockchain enables that. In a traditional private fund, there are sometimes called redemptions when you invest in funds where you can actually pull some of your money out, but that gets complicated. A lot of times, Matt, like I know you and I are invested in the same deal in San Antonio. Like you saw the PPM. It's like if we want to get out of there, we have to take a haircut, and there's no right for them to buy us out. We just hope that they can buy us out. So
and I guess the other cool thing about it too is that and I imagine the way you're describing it, this is what it is that the they have autonomy to go out and sell it however they want, right? Like if cap rates drop down to say it's at 2 and they say, hey Andrew, I've got this much ownership in this fund and here's the cap rate, therefore I'm valuing it at this price, and he can buy that from me and take over.
Absolutely.
And you can buy, if you're an existing owner, you buy more shares from someone else.
That's what gets me so excited. So like people ask me like, hey, are you going to cap? Like what if people sell it at a really bad discount? I'm like, no, man, that's everyone's freedom. Like that's their choice. I'm a Milton Friedman guy. I like free markets. Like if that's what you want to do, that's what you want to do. And I'll be the first one to buy them.
So what is it? I'm likening it to stocks, right? Like if there's a lot of volume being traded, then it makes it easy to sell. is there not a lot of volume right now because it's newer?
Yeah, great question. So we're building up volume now. So I think the technology, we're very early, like we're probably like first or second inning when it comes to digital securities. But as you can see, things are, I mean, obviously they've grown pretty rapidly in the last year. So liquidity isn't there like a NASDAQ or an S&P 500, obviously. So over time, we feel like the market will create more liquidity as things get more tokenized.
And will there be a bid and an ask?
Yes.
Wow. That's awesome.
And then also, too, you said you have 3 options on how to get paid in which currency. Yeah. Are 2 of them, the other 2 that are not USD, are they digital currencies?
They are.
So you could choose to get paid in the digital currency and also hopes that value increases as well over time.
Correct. And we have a strategic, I say this a little premature, we're establishing a relationship with BlockFi. Are you guys familiar with BlockFi? No. So BlockFi is basically a crypto lender. But you can get your distributions directly to your BlockFi account. And your BlockFi account earns interest. So right now I have stable coins, USDC, in my BlockFi account that pays me 8.6% interest. So
that's pretty good.
What we're trying to get our investors to do is, hey, look, if you like this technology, cool. If you don't, you don't have to opt in. But if you do, maybe consider putting all those monthly distributions into BlockFi and earn 8.6%.
Is a lot.
Yeah. Well, and also too, I mean, it doesn't seem like there's a disadvantage for opting in, right? You still have your ownership, still get paid USD. There's no difference except now you have an option.
Yeah, and
right?
let's say Alex, like, 3 years in, you're like, I don't really trust this security. I don't want anything to do with it. I just want to pay my US and get my US distributions just like a private fund. 3 years from now, you're like, oh, you know what? I'm actually getting more educated. I like this. Like, actually, I'm gonna opt in. You can opt in later.
Oh, gotcha.
There's not like the moment you sign, you're signing your name and blood. Like, you can literally change it out.
Wow.
Cool.
So can you take this system you're creating and can you use it with other syndicators where, like, you got your own syndication and your own system? Can you offer your system to another syndicator and have that be part of your business?
License it out? Because
why would they not want it as an option?
Yeah, no, I think a lot of syndicators are learning right now, and everyone we talk to is just like after I talk to them, they're like, wait, and they want to go down the rabbit hole with me, and they're like, man, this is so interesting. Yeah. I think there's going to be some of those opportunities come our way, but man,
it's not part of the strategy right now.
All I care about is returning capital to our investors. Like, at the end of the day, I just want to literally help people achieve a level of financial freedom. Yeah. And so, if those opportunities come in the future, cool, but definitely not the focus.
Well, I know you're very smart, and you probably see the bigger opportunity because you're doing something unique, right?
Yeah, like, blue ocean opportunity.
That's right. Yeah. That's what I like. I love when it's like, how can we be different? Like, you're setting yourself apart, and you're not just a standard syndicator. Yeah. Yes, you have those same goals, but you have like a massive opportunity with what you've added on to this.
Yeah, I'm gonna butcher this quote, but I keep going back to this quote by Peter Thiel, which is like, look, technology, like new advanced technology, is meaningless unless it creates value to people. And I just think I keep going back to, I'm like, this just creates so much value once people can actually truly understand it and get comfortable with it. I don't see how syndicators a decade from now can do anything other than something like what we're doing. Nice. Because investors are just going to want that optionality. To Alex's point earlier, it's like, man, that's why I don't invest in those, because I don't want my money tied up for 10 years. Like, what if you find an awesome deal with Matt to flip, and like you're looking at it and you're like, oh my, this is a development opportunity of a lifetime, but dang, all my money's tied into these things I can't tap.
Yeah, that's the whole reason. Yeah, I don't want to. If I did have that opportunity, I would have invested in probably 2 of them already.
Yeah. Wow. So how did you come up with this concept?
I can't take credit for it. In all honesty, I hated it at first. I was like, man, like, because we were doing syndicate. You got to go back a year. We had 2 shopping centers under contract. One was in Nashville and the other one was in Houston. And I'm like, foaming at the mouth. We're getting everything going. COVID hits. And it was devastating because we knew those deals were dead. Some of the tenants in there were not going to be able to make it through COVID. And so luckily we got our money back. And there was a lot of money back too. I mean, our money didn't go hard, thank God. But my partner's like, look, man, like the syndication model, it will work. We can go and do some deals, but I think this is the future. And I went kicking and screaming. I was like, man, blockchain, like people look at this with a stigma. They're going to think we're crypto. Crypto's a mess. And remember back then, I think crypto was like Bitcoin was trading at like 8,000.
Oh,
it was low back then.
Yeah. March this time last year.
Yeah. So now everyone's like, oh, okay, I'm interested in this. Well, yeah, that's because, Bitcoin's at, almost 60,000. But back then, like it had a lot of stigma. And Matt knows me. I'm conservative in nature. Like I look at life just a little bit differently. I want to analyze it and understand it before I kind of dive in. And my partner really pushed me to get educated on it. And as I honestly started to figure it out and realize I have strategic technology partners that this is all they do. Huge companies, like unicorn companies like Securitize and BlockFi. And we have a fund administrator that handles like huge hedge funds. Mm-hmm. And they could structure this for us. That way I'm not having to do the heavy lifting. It was just a no-brainer because it just adds tremendous value for folks.
So you started looking into it and you're like, all right, man, I think I see.
Well, I mean, it wasn't like, all right, man. I mean, it was like, okay, it was like a book, then maybe like a show and talking to some specialists. Yeah. And it took me a good like 6 months to finally get my head wrapped around it.
Yeah. And then you're like, all right, let's go.
I'm like, let's do it.
Nice.
Now, if this was Matt, like this is what I love about Matt. Matt's like, like forget it. Like I'm going to go all in. I'm diving in. And see, that's the difference between Matt and I is like, that's what I love and admire about him is he just goes for it.
Yeah. Thanks.
He's all about action. And I'm the dude on the side, dipping my toe in first and like, okay, it's not too cold. It's not too hot.
You need the balance.
Yeah.
And that's what I have with Alex. And that's maybe your partner's more like me. I don't know.
I think he's got a little bit of that, like he doesn't stop.
Yeah.
He doesn't really watch TV. He doesn't really like waste time. He just goes.
Yeah. Well, I'm excited, man. It's interesting to think about because we try to view things with a 20, 30, 40, 50 year mindset, maybe even 100.
Yeah.
Really, truly. And we all can see what's happening, the future, and things are changing so fast. Mm-hmm. And so it's fascinating to me because you're sitting here early on, and I know you're very sharp, and to understand like what it's going to look like in 10 years could be unreal.
Yeah.
Are there a lot of competitors or people that are doing similar things?
Yeah, they're the St. Regis. There's been a hotel. I actually believe that it's easier to syndicate via digital security on one asset, so one office building, one apartment complex. I think it's so much easier that way. What we're doing is very unique in creating a fund where we're buying a basket of hopefully 50 to 100 properties, right? So that's been a little challenging. And just to make things more interesting, we're allowing foreign investors to come into the fund as well. Nice. So we have a U.S. share and we have a foreign share.
Okay.
Yeah.
Wow. Mm-hmm. All right, now to the real estate.
Yeah.
Most important part.
That's right, man.
Walk us through how do you uncover these opportunities? How do you analyze them and determine which ones to go with?
Yeah.
Because all of this is great. It's an add-on. But if you don't have good real estate, it's not going to work, right?
Yeah.
And I know you're getting good real estate, so I kind of want to understand what is y'all's process?
100%. So we've got some really amazing sharp partners. All of us have a REIT background or institutional level background. So tons of experience of analyzing deals and analyzing different markets. That's one of the coolest things about my job and my experience in real estate is like, man, I've worked in like the worst towns. I've worked on like the worst types of properties. I've worked in amazing markets. Like I get to go out to like, Santa Monica and Seattle and, Denver and these other really amazing pockets and kind of get a feel for the lay of the land. Mm-hmm. Where we're really heavily focused is we like to look at demographic trends because we all know retail follows rooftops. So wherever the trend and growth are, that's where we want to buy assets, first of all. So we really there's been what we call this, it's corny, but a swarm to warm. So all the warmer states have been getting huge population increases. So Texas, Phoenix, Nashville, there's parts of Tennessee that are also growing, Clarksville, Florida's growing, Atlanta's growing, Virginia, North Carolina. And so we're really attracted to those areas that are bringing a lot of families, have good demographics. And I can dork out on this, so just stop me if I keep rambling.
We'll go with you.
One of the big things is like we want to be in what's called the retail nexus. So I want to be on the main street. I want Walmart across the way. I want Target down the street. I want to be in like where everyone goes and congregates. Mm-hmm. I want a lot of vehicles traveling per day. Mm-hmm. And then I want to be able to access that property really easily, right? Mm-hmm. I don't want to be like going 60 and then have to swing in to access the space, because that's its disadvantage.
It's real. That was a big learning point for me when I worked at Edge doing commercial. Is like the ingress and egress, and whether you're in front of the light or behind the light, these things matter.
Yeah. And we want growing areas, like areas that are on the rise, right? So we want to look at the cities and the underlying demographics for that area. We can go into like lower income areas, higher income areas. We just need to make sure it matches up with the blended demographics around it and where it's trending, right? So we'll look at detailed analysis there, make sure it's a diverse enough market. We're pretty familiar with the markets that we like to buy in at this point. But it's getting your butt out there, flying out there, making, spending hours. The cool thing about our job is that, man, we've studied so many different markets. Like I can go out to like Nashville and get a lay of the land on like, okay, here's the path of progress, right? Like clearly we're seeing where it's at.
Right.
Like in Austin right now, we know Liberty Hill, 183. I'd love to buy some single tenant stuff up there. Mm-hmm. Round Rock's going through a resurgence, right?
Yeah.
Georgetown's doing really good.
Mm-hmm.
So, we kind of understand the pockets, and then we do like a really deep dive on due diligence. Probably too much. Mm-hmm. I think we need to streamline that a little bit more, but I think for the start of the fund, I think more detail is better than less detail.
Yeah.
And we're all cash buyers at first, right? So we're gonna raise money, and we're gonna go buy those properties, and then we're gonna get a portfolio loan on the back end. So that's another advantage we have compared to other people, right? So if you owned a CVS on a great corner and you've got some REIT that's going to tie your building up for 90 days, mm-hmm. or I come in all cash, mm-hmm. you're going to probably want the all cash offer.
Mm. That's great. And the due diligence is, credit on the tenant, the obvious stuff. What are the things that you think are maybe too detailed?
So I'll go into this, like we're really buying these leases, right? I mean, at the end of the day, we're buying these future cash flows. And so I need to understand the nuances of that lease. And this is where I get really into the details. Like most leases, they have preset escalations. Mm-hmm. That's why they're so great against inflation. So big nationals like CVS, Walgreens, they're going to have a bump every 5 years. Mm-hmm. Some of my gas stations and some of my medical tenants pay me increases every year, mm-hmm. right? And so we need to make sure and kind of budget around kind of when those bumps are going to happen and make sure we have a nice blend. That way that investors are getting that nice pop mm-hmm. and growth. And then there's no like crazy termination lease language in there. There's no crazy assignment subletting language in there. So we want to come into it eyes wide open. Mm-hmm. I tell people all the time, they're like, oh, you should go buy Starbucks. I'm like, how many Starbucks leases have you built or done? Because I've done them. I can guarantee you they're not friendly.
Yeah, they're brutal.
Yeah, and people buy these things in like a 5 cap or 4.5 cap. And I'm like, man, do you have any rights they have in that lease? They can exit like that.
Right.
They can sublease, assign it to anybody. Mm-hmm. To me, that comes with a risk premium that we try to stay away from.
Mm. With you were talking earlier about correlation between interest rates and cap rates. So I assume you're talking about they move together.
Yeah,
yes?
A little bit. Yeah, I mean, look, you can probably play around with this a little bit. I've listened to different economists, but from my general feeling is, look, if interest rates are low and access to capital is cheap, right? Naturally, you're going to see these assets swell up, and that's what we're seeing now. Yeah. So you see a lot of cap rate suppression.
And with all the money supply, new money.
Oh yeah.
I had a buddy call me last night. He was drinking, kind of big broker in town. He's like, dude, we just need to buy assets. I figured it out. Inflation's coming. I love it. I'm like, yeah, man. I've been on that train for 10 years. Like, yeah. Buy real estate, man. Yeah. Always.
Yeah.
What have you been buying?
I know. Like, I hate sitting on cash.
Me too. I've been sitting on way too much. It bothers me. It's hard, right?
Yeah.
Psychologically.
We get it out, man. Like, anytime we get but ours is interesting. I think about multiple markets, and it almost, there's like I guess it's because we're so focused here. Yeah. Like, trying to learn another market to me is like such a process.
Oh yeah.
No, and like I just want to zone, and everyone has different strategies. our goal has been like, we want to be Austin real estate resource, like everything Austin. And that's going to keep us, at this time from doing all these other cities.
Sure.
But if we were to do other markets, we'd probably miss out on stuff here.
Yeah.
And it's just different strategies,
100%. I think I would be more in line with what you're doing if I didn't have those relationships outside the state.
Mm-hmm.
Like I can call like 3 of the top guys in Florida.
Mm-hmm. And you trust them and
Yeah. Or if I know they're BSing me, right? Or I can call the best guys that I know in Atlanta.
Yeah. But I think also, like, for what you're doing, like, you have a niche. Like, you're like, we're trying to buy this type of, most likely, is it retail?
Yeah, we call it essential businesses, right? So it's not, medical buildings or I guess quasi-retail, right? But essential businesses. So something that's not going to be crushed by online.
Got it.
Yeah.
So when you have a niche like that, like, it doesn't really matter where you want to buy.
Yeah.
Where, like, for us, it's like, we just want to zone in on whatever good value there is in Austin. We're interested. It could be self-storage. It could be raw land. It could be mobile home.
I agree.
So it's just...
Well, what is y'all's strategy there for, those businesses in that real estate? Because you buy one of those essential businesses in Austin, you may be paying a ton more than you would in some random city in Tennessee. Like, is the goal for the cash flow, or working both sides of the appreciation and the cash flow for your investors, or what is the goal of the fund there?
Absolutely. It's a mix of both. It's just greater diversity. And I have nothing wrong with match strategy, so I don't want to
it's just different perspective. We're doing totally different things.
Totally. But I think of like, if I'm over levered in one market, like if tech and VC money dries up in Austin and people stop coming here and the city keeps making poor decisions that affect business, like you're hamstrung to what's happening here.
Totally.
Whereas like, if I'm in these other pockets, you get if one's down, another one may be up.
Mm-hmm.
The other one's down, the other one's up.
Yep.
And so I like the diversity, but it's, look, I'm heavy cash flow. That's why I'm so big on like paying people monthly. I'm obsessed with that. I'm like, you got to pay people monthly. It's an income fund, but at the same time, we would like to have some appreciation, even though when we model these things out, we're not anticipating like huge cap rate drops. I mean, cause we're pretty historically low. But the assets, the individual assets that we'll be going after are going to be like gas stations, mostly medical, but we got gas stations, auto service, right? So like you got to get your tires changed. I know you got a nice big truck out there, right? You're going to have to change the brakes on it, get an oil change. You're going to have to fix it, maintain it. So we like those types of uses, not the auto parts stores. I'm talking about the physical. You got to go in there and get it fixed.
Right.
We like daily needs. So like a Tractor Supply, grocery store like an Aldi's. We'll look at some dollar stores, even though they're more of a defensive play. They do better during recessions and kind of do weaker during times of high growth. And that really kind of rounds out our fund. There's some other little pockets that we may dip our toes into. For example, like Easy Pawn's a publicly traded company. They've got pretty decent credit. If I can buy one of those at a 6.5 cap in Houston, good area. That's something we'd probably take a look at. And then maybe 1 or 2 telecommunication deals with like a Verizon or AT&T, because the credit's outstanding and they need that brand awareness with their customer. So, we like some of those assets to kind of round it out.
Is it a lot of, do most of your deals come from brokers? They're listed, or are you guys doing a lot of off market? Like, what's that process?
Yeah. So, there's probably about like, I'd say like 5 to 10 key players that you have to establish relationships with. I get off-market deals sent to me like once a week. Really? And yeah, I mean, they're constantly sending me stuff, and it's funny because this, it's like, oh, off-market, like that must be like the best deal. It's like sometimes it isn't the best deal.
No.
Right?
I know. I used to struggle with that. Like, what does this even mean, off-market? It just means that like it's not technically listed on the MLS.
Yeah, exactly.
It's not on the market.
Joke. Yeah.
Everyone else has seen it.
Hey man, I got the secret. Yeah. It's at a 4 cap. It's awesome. No, it's not, bro. It's not a 4 cap. Okay. Yeah. No, we get a lot of off-market deals. We have a lot of relationships with like the big brokers. Yeah. And I've been going out to ICSC like every year, and so I know a lot of these guys, and I'm also a CCIM, so I can call up my network and find a way in. But it's a numbers game.
So it's through the networking. In a lot of ways, and the people you know. And
you'll actually appreciate this because you get it. Like, and I'm not saying your business because I don't know all the details, but it's a lot of volume, right? Like wholesaling and renos, like there's a lot of product on the market at any given time. there's not a lot of like apartments on the market, big apartment complexes on the market at one time.
Right.
But these single tenant buildings, they range from like $1 million to like $5 million. And so they're always floating out there, right?
Mm-hmm.
And you just got to be on it. It's kind of like if you wanted to buy a house here in Austin, right? Like, dude, I know you're bird dogging. Like, you're probably on like refresh, right? And you've got people on,
we have,
speed dial.
Our wholesale, can you tell me about the wholesale, like what we do? I mean,
yeah, but it's just a lot of, we have some that focuses on the MLS and what's there, but then most of it is just through outbound outreach directly to the sellers.
We have multiple VAs, cold calling, mailers, door knocking.
Yeah. I mean, and that's another strategy we want to implement. Like, let's say we're really big into like 7-Elevens, right? But we don't want to pay a 7-Eleven cap in Austin. Well, all right, let's find like smaller suburbs in Florida or Atlanta, and look, there's 50 of them. Let's send them a letter.
Yeah, and that was my question earlier. Is like, the cap rates. Obviously, if it's some smaller city in Florida and you just want a 7-Eleven, like maybe you get a 12 cap in Florida, but it's the same 7-Eleven here that would be here in Austin.
Yeah.
And so y'all are going for those 12s.
Yeah, we go for a blend. I mean, what's interesting about like residential versus commercial, right, is, the cap rate really dictates the price, and there's other functions that dictate where the cap rate is based on the cycle we're at. And so, we want to be cautious. We want to make sure to buy in the right areas, but we also want to yield. So it's how do you find that diamond in the rough? I don't want to overpay for an Austin asset, because keep in mind, these 7-Elevens, I'm just using them as an example, they'll have a 10-year lease, and then they'll have 3 5-year options. Well, they're all preset options. So if I were to buy that bid on appreciation, I'm probably going to get under market value, because 7-Eleven signed that deal saying, hey, look, we know Austin's going up rent-wise.
Yeah. So
I'm going to bake in my rental escalations now and maybe be 20% under the market. And so that doesn't do any of our investors any good, right? So we look for a blend, and we try to find those like misused toys, right, in these markets that are what we think are growing like crazy. Yeah. And most investors want to put them in the best markets, and I understand that. But if I could find like a deal in Round Rock, I'd be all over it. Like, I looked at a Jiffy Lube the other day at 6 cap, kind of down the street. Mm-hmm. Great location. All the vehicles are driving past it a day. Easy access, great visibility, nice parking. It's a huge franchisee. He owns over like 1,000 units. I love that credit. And he's got 7 years left on his term. Mm-hmm. He's got baked in rent escalations. I'm not touching maintenance. Mm-hmm. So there's no like toilets I got to replace. There's no roof I got to replace. He does it all. For
the maintenance there on those leases, so on this one specifically, the roof, anything, he takes care of it. Mm-hmm. Do y'all have, I imagine y'all do have some where y'all have to take care of the roof or the foundation, or?
Every once in a while. So I think we'll have a very small percentage of our fund that will be invested in what's called double net properties. So like Aspen Dental's one that I'll say, like, usually Aspen does double net leases where it's like, okay, we pay for taxes, we pay for insurance and most maintenance, but Mr. Landlord, you take care of the roof and the foundation. So if that's the case, you got to bake in a premium into the cap rate purchase and underwrite the risk. Mm-hmm. Hey, if it's a building built in 2019, brand new roof, it's got a 10-year warranty, I'm not as concerned, mm-hmm. right? But if it's one that was built in the 70s or 80s and it's looking a little wary, like, I'm probably not touching that, because to replace a roof's like $5, $6 a foot. Mm-hmm. On a 4,000 square foot space, it's not huge, but it's, that could wipe you out cash flow wise.
Yeah, that makes sense.
Mm-hmm. So I'm thinking about like other syndicators like Ben or anyone else. Like, do you guys pass deals on to each other? Does that happen a lot? Like, hey,
I have great respect.
At a lot of deals.
Yeah, no, I've got great respect for what Ben's doing. I just saw he just shot me over an email for an office deal that he wanted me to invest in. Yeah, we do different things. Like, I think Ben's going more after like shopping centers, office, maybe some industrial. Every once in a while, our paths will cross. Mm-hmm. I think they're, I say this with all respect, I think they're more of a deep value add type of operate. Like, they're looking for that diamond in the rough. Like, they'll go invest in like Illinois, Detroit, things like that, which are cool. But, there's risk, right? And so I'd rather invest in like a Florida and pay a little bit of the premium and not get as much pop, but understand that I'm not having to take on that risk as well, because what happens if that tenant moves out in Detroit? Who's going to backfill it and at what rent?
Right.
Maybe they win, maybe they don't, but you get a better return most likely, probably.
Yeah. No, there's something that I'm just fascinated with, because I'm in the networking, space, and like, if people are doing somewhat similar things, I feel like there's almost always something, like, but it never comes to the forefront if you're not actively thinking about it. Like, just even, you talking to a broker, there's not just Ben for an example, but like anyone, like the more people that you're collaborating with, the better.
That's right.
There's got to be things that a broker said that you could relate to this guy or me or Alex or whatever, and vice versa. And I think if people can hone in on that, there's a lot of value that can be created.
Totally.
That's what
agree.
I try to do with like really understanding what people are looking at and looking for.
Man, I'm all about helping people. Right. You know what I mean? Like, I know, I'd do anything to help you guys out.
Thanks.
And like, I think Ben is great. Like I'd invest with them. I wish him the best. And sometimes it's just good to collaborate and like share ideas.
Yeah.
But I'm rooting for them. I want them to crush
absolutely.
it.
Absolutely.
And, but that's how I kind of feel about all the syndication stuff. I want more investors in real estate because of all the benefits. At the end of the day.
Is that what you love about real estate? Is real estate your favorite asset?
It is, but it's not so much. I don't get like goosebumps thinking about real estate at night. Yeah. I use it as a vehicle.
Dude, I agree.
To me, it's just a great vehicle. I grew up, my dad, had issues with work and addiction issues. And so like I saw what a 9-to-5, which wasn't really a 9-to-5, but like crushing his energy and spirit and how it affected our family. And I was like, man, I don't want anyone to go through that. Yeah. So for me, it's all about like, what can I do to enhance people's financial freedom? And the vehicle just so happens to be real estate.
I'm on that. About 6 months ago, I realized it. I would always say, I'm so passionate about real estate. And I was like, wait a minute, I'm not.
Are you? Yeah.
I'm just passionate about what real estate will allow.
Yeah. Yeah. And I want freedom, man. Like, I was climbing the corporate ladder and I saw where my path was going. And it was like, hey, we want you to be head of asset management for a $14 billion company. And like, you'll never have to worry about money again. But I remember him telling me, he's like, the hours are, it's going to be everything. I mean, and I'm like, I don't want that. Yeah. I don't want to move to Chicago. I don't want to, great. I'll make a big salary, but I'll never be able to hang out with my kids. I won't be able to coach them. I'd rather take a pay cut and have more flexibility and have a chance to just learn. Cause I noticed this cycle in me a lot. It was just like, you're just busy and you're just running in a circle. You're not growing. You don't have energy to give towards anything else. And it wasn't very fun. And for me, what's exciting is like hanging out with people like you guys, talking, learning. Like I want to learn about what you guys are doing more to see if I can connect some dots for you. Go read, go explore something that I've never done before. That to me is fun. Yeah. But you got to be able to control your time to do it.
Yeah. I love it, man. And we talk about like I talk about having staying power. Like if you have the ability to stay in the business, real estate, like there's always something around the corner. Yeah. But you got to be in it, and you can't be. I don't think you can be part time. I mean, you can do whatever you want on the investing side, but like to do it right, you got to be really engulfed in it and hear what's going on and know the players and know the market and all that kind of stuff.
I totally agree. And actually, we were both athletes. I'm super competitive.
Me, not so much like you.
I was so competitive.
He played college football.
I'm still super competitive, like in an unhealthy way.
This is the athlete, Andrew.
I like it.
Starting varsity linebacker.
But I'll tell you, nothing. I hate losing more than I like winning. I'm still that line from Moneyball. But like, nothing gives me more satisfaction than like busting my ass and knowing that that's what paid off. Like it wasn't anything God given. It was literally just my effort that puts me atop. I think that's like the coolest thing, right? So like your extra like 30 minutes that you gave on a Saturday, that you met that one-off guy like 6 months ago, brings you a deal. That's great. And it's like, to me, that's like, God, I didn't want to go to that meeting that day. I was exhausted. I was really tired. Like I had stuff going on with my life, but I did it. It was fun. And then now I get the reward. Like that's so cool.
Putting in the work, man. And it's I just feel lucky. I mean, I just look around. I'm like, it's a beautiful life. There's just so much opportunity. One, we live in America. That alone, like, there's every opportunity in the world, and I see it time and time again. the people that really want to accomplish stuff, they can. And I know I used to think it's like kind of cliche, and back when I was, you know, trying to get to a certain point, I'm like, man, I'm never going to get there. But you almost have to have that fear. It's good to feel like you're not going to get there.
Yeah.
And try and keep that.
Yeah.
That's how I kind of view that.
You know, it's funny. I don't know if this has ever happened to you, but like I had done something. I was chasing something that I thought I wanted. When I got it, I was just empty. I was like, man, is this all there is? Mm-hmm. Have y'all ever had that feeling before where you do something and you're like, and you realize that's not what fulfills you? Like it's actually the grind and the chase. And it took me a while to realize that, like, man, I love that aspect of it. Like I want to get down and I want to put in the work, but at the same time, like, when you get to that place, it shines a light on like who you are and like what drives you and what you're passionate about. And if you're not doing it, you're doing it for the wrong reasons. Mm-hmm. To me, that's like, I think everyone has like an innate superpower, right? Like their ability to do something that just is better than the next person. And if you're not exploring and tapping into that, I feel like a little bit of your soul is dead. So
I love it.
Sorry to get weird on you, but like, hey, honestly, man, like
honestly, I've thought about it. I feel like for me, it's a connector. I feel like I'm just a connector. Yeah. Someone said this other day, and I thought it was kind of cool. He's like, when they were making you in the heavens, like, this is what they made you for.
Yeah,
like,
man.
Yeah, I think you're right.
Yeah.
So what is it for you? You have you thought about that? Like,
you know, honestly, I just think it's helping people, man. Like I get more satisfaction. I don't care about all the material stuff. I've got a funny story. When I was a young broker, I bought the nice car. I had like the nice clothes. I didn't realize I had to pay taxes on my commissions. Get an IRS bill of like $15K, and I had like literally like a couple grand to my name. But I went broke with that, man. I went broke from that, and it was so nice because it kind of just, you know, once all that fear goes away, and I've failed so many times in life, like big failures, like with football and with relationships and financially. And, you know, I think when you're in those moments, like you can use that negativity for like a positive, or it can just take you down even further. And for me, it's given me space to like figure out what's important, and it's just helping people. It's literally, I don't care about much of anything other than like being a good dad, and adding value for people.
That's awesome. It's a good way to live.
Yeah, man.
Especially in real estate business.
Yeah, and we're in a good city to do it too. Austin's been very kind, right? I mean, God.
Yeah, we call it Opportunity City.
Yeah, no, totally.
I mean, I think it's everywhere. And I met a girl today from California, and she's like, I'm from Silicon Valley, and like all I do is I look around and I feel like this is that 15 years ago. And I'm drinking the Kool-Aid, man. I think we're in the best market for 20, 30 years. Thinking what this place is going to look like really just kind of blows my mind. I mean, I think of it as positive as anyone could. Yeah. And kind of what you were saying, like, and not that you're wrong by any means about like betting on one market. Yeah. The way I think of it's like, if I'm going to bet on anything, I'm going to bet on Austin. Yeah. And then you think about the politicians and stuff. You're like, oh, maybe I'm betting on politicians, and that's not smart because they can make a difference.
You know what though? Everyone has to quote Buffett, right? If you're going to talk for an hour about business, you got to quote Buffett. You know, he's hyper specialized. Yeah. And he talks about his core of competence, and like he waits for the fat pitch. Man, your fat pitch is Austin, and there's no right or wrong reason. Like, dude, I talk to brokers that only focus on Austin that have done extremely well. Built businesses here. It's awesome. Yeah. And I see you 20 years from now, you'll be, God, I don't know what you'll be doing, but it'll be something related. And I think it'll be bigger and better, right? It'll just continue to grow and compound in a positive way. But if you're hyper specialized and you know what you're good at, you can just hit that same pitch, right? Right. And just kill it.
Man, talking about Buffett, just kind of random, but I was like just sitting there just wondering, because he's sitting on all that cash still, I think.
Yeah, he did all those buybacks last year. Do you see that newsletter he sent out?
The recent one? Yeah. I didn't go through it. Those are really cool, though. I like those.
He's a great writer. Yeah. Yeah.
Is that where they spent a lot? Did they spend a lot of it? Because what I understood, they had almost $100 billion in cash.
Oh, yeah, huge cash position. Yeah.
And I was just like, in the middle of COVID, I'm like, dude, he's probably loving this. But I don't even think he did anything. And like, even more to his testament, like that's how patient he is. He's like, no, I'm still gonna wait.
I love it. Yeah. And his partner is the best, isn't he? Like, my, I think listening to Munger at conferences is probably like my favorite YouTube. Like, just go down the rabbit hole on YouTube. I'm like, this guy is still killing it. He's not even intentionally making jokes, but he's just
he's sharp.
He's super sharp.
I called his office in college.
Did you?
And I was like, "Can I talk to Warren?" And they're like, "Who the hell is this?" It's like, "My name's Matt." You know, like, "Sorry, we don't do that."
That's hilarious, man. Yeah, he's probably in there reading or playing some.
I know. I'm like, my heart was beating when I called. Like, it was racing. I'm like, let's see what happens.
Yeah. No, his stuff about value investing and the direction with him and Charlie have gone is just fascinating. Yeah, it's crazy. Yeah, I love their approach though.
When I was helping a friend recently with stock, and I'm like, if you're gonna buy any stock, just buy Warren Buffett stock. Like, yeah. Well, I don't really personally like. Why would you buy a fund and have your financial advisor put you in these funds? Like, just buy Warren Buffett. He's the best. Yeah. Buy what he's buying.
Exactly.
Yeah.
No, I totally agree with that, man. And they're well diversified too.
Yeah.
And I think Buffett's advice for most people is like, hey, 90% S&P 500 index, low cost, 10% short-term bonds. Mm-hmm. Like, people try to make it super complicated, and it's not.
Yeah, and he's had some of those bets with hedge fund guys.
Yeah, that's right.
What would perform better over 10 years, and he always wins.
Yeah.
If you bought S&P this time last year, you'd be up about 50-some%.
That's right. Yeah, I mean, it's pretty tough, but then you can, but you can play games with numbers too, right? Like from 2000 to 2010, S&P was flat.
Yeah. Right.
Right,
I know. The last 12 months, you'd be up 50%.
Recency bias right there. I love it. Yeah. I'm always looking for my biases when I'm looking at deals, but yeah, I used to be a big Bogle fan. Like, I think, the founder of Vanguard's like, I think he's created more wealth for the more of like the average person through index funds and things like that. And just like the message of long-term investing, because from what I've read and what I've learned is like, it's really easy to be a trader. Like, it's fun, it's exciting, it's exhilarating, but like, it's really hard to stick to a plan and rebalance into the pain.
Right.
And like, once you commit to that and you're like, okay, I'm going to buy this, even though it's down and it'll hurt. But you just stay to it and stay to it.
And then that experience pays off. Like, I had a really tough time in the middle of the pandemic because I have a lot of my percentage wise in stock.
Yeah.
Cannabis stock, because I just believe in that. And it was tough, man. But I stuck through it and I bought more, and now like it's rebounded and it'll have these little dips, and like people are panicking, and I'm like, that ain't no dip. Like, if that's a dip, I'm doing good.
Yeah.
And what I realize is that long-term approach, if you're in it, it just gets easier and easier, and you realize like these things do change.
Yeah.
When everyone thinks it's bad, depending, you obviously got to be in the right companies.
Yeah.
But that long-term approach with everything in life, with meetings, like I'm learning a lot. I'm having massive amount of meetings.
Sure.
And I'm on this kick now of like, I'm just trying to meet you right now. I don't really even want to talk business. We'll talk business on the third or second meeting. Yeah. But everybody wants to close the deal. Like, hey, you know how many title companies like want to like have our business, and they approach it like, we're gonna have one coffee meeting, and then all of a sudden we're just gonna give them all our work.
Yep.
Doesn't work like that. And like, people miss that. And if me as a networker can approach it completely different, then that is my competitive advantage. Like, I'm going to be having the 6th conversation with this person and not just one and done and looking for that sale right away.
And I'd rather invest. It's all about relationships, man. I'd rather invest with people that I know and respect. Like, if honestly, all joking aside, if Matt brought me a deal tomorrow, like, you're like, hey man, you into this? Mm-hmm. I'd probably just be into it. Yeah. Because I know you. I know you're going to put your lot of like your heart and soul into it, and put smart due diligence into it. I just invested in an industrial building in St. Louis, Missouri, and like, it's a guy that I know, and I've known him for years. And the guy's crazy. All right, he's even like a little weird as far as
he's
his
the
analytics.
Wild card.
Yeah, and then you got the other guy who's like this. He's the face, and he can go out there and sell. But they didn't need to do any of that with me. I'm like, here, boom, I'm in. Yeah, I could sit there and analyze the deal, and I could say, well, sensitivity this and the end of the day, I want to be with people that I respect.
Right.
And
I agree.
To me, like, you get that through learning and meeting people.
Yeah, and it takes time.
Putting yourself out there too.
Yeah.
It's not easy, and it's...
Dude, it's not, man. I still get shut down all the time.
Yeah.
Because I'm outbound trying to meet people, and it kind of sucks because I truly am going at it in a way that I know works. Like, the way I feel is, if somebody's very serious about real estate, especially if they're like serious about it in Austin, I almost just know 100% there is a way I can add value for them.
Yeah.
And if I can just get in there and figure out what it is, I'll do that.
Yeah.
But there's just so many people that are like, what's this about? I'm like, honestly, I'm just trying to meet. Like, seriously, I just want to meet you and
no
introduce
strings.
myself. And
No strings.
I know I can add value.
Yeah.
That's all.
Yeah.
And a lot of people don't want to do that. A lot of people know that the networking thing's valuable, and they're like, I need to do that, but they don't. You know.
Yeah.
And I'm lucky that I'm able to do that, and that I've found something that I want to zone in on.
Yeah, and I think it's cool. This format's awesome. I think these are the types of podcasts people need to be having, because I go on the other ones that are all scripted. Right, here's the questions. Well, for the most part.
Dude, you're right. Now that I think about it,
and it's like
we're more like, at least for me, like I love Rogan. He's the #1 podcast, and that's how they do it. Mm-hmm. It's not supposed to be an interview. That's an interview. It's like, let's just talk.
It's not authentic, man. I think about that all the time. I just had to do a large presentation. And it's like I'm literally scripted like a robot. Just going through it, checking each box, and some people are going to learn that way, but not many. Mm-hmm. And if you really study, like giving speeches and stuff, most people don't care. Like if you don't grab their attention within the first like couple seconds, you're done. Alligator part of your brain shuts off. They're not interested. They're off doing something else. They're not even hearing you.
Right.
All they can pick up on is your energy. So anyway, I used to have fear of public speaking.
Yeah, I did too. Actually,
I still do, but like it's gotten better. But so I'd read all these books from these like world-renowned speakers, and I always remember that before I give a big speech. It's like, hey, no one gives a shit.
Yeah.
Like, not a lot of people are going to be listening.
Yeah.
So just like do your thing, be positive, have good energy, and half of the people are going to hate it.
Be real.
Yeah. Other half, whatever. They may connect.
Yeah.
Dude,
just
have fun.
I had the same thing, and I remember in college, I was like, I have to be able to speak in front of people.
Yeah.
If I want to do like anything, big in life. That's how I felt. And I signed up for this thing called Toastmasters. And I remember like walking, I didn't even want to walk in the class. I was like, my heart was racing. I'm just like pacing. I was like, I ain't going in there.
Yeah.
But I was doing this on my own free will. Like I just wanted to do it. And I started praying about it, man. And I was like, please, like help me, like feel led to this. And then I went in and I did my first speech, and like it went away, like right when I started. It was like just taking that step.
Yeah.
I realized it wasn't that big a deal.
Yeah. You got to expose yourself to stuff in life, man. To me, that's what it's all about. And like, go fail, but have fun, make fun with it. Like, the older we get, like the less we play. And I think you got to make fun with your job, dude. I mean, we're doing this all day,
Right.
Have fun with the people you're connecting
Love
with.
it.
Like,
be present.
Go
enjoy.
fish with them, go golf with them, go hang out. Like, establish real relationships, turn the phone off.
Yeah.
And
this is kind of random, but when I thought of this yesterday, you're talking about like there's always going to be people negative, right?
Yeah.
It's like, all right, think about Elon Musk, right? Like the way I view it is, I almost think like he's like in a movie, he's like the richest dude that's usually the bad guy, but he's a good guy. That's how I feel.
Yeah.
Like he's doing positive things for humanity.
Agreed.
And there's people that hate on him. And I'm like, if people are going to, I can't really understand. Maybe I don't know enough about him, but I'm like, why would you hate someone like that? And so what I started thinking about is like, and we don't have any haters right now, but I'm like, once we start getting people talking mess and hating on us, that's probably a good thing. Like that means that we're like making it.
That's right.
That's
right. We do like these webinar meetups, and we get all kinds of people on there, and we have an open chat, and like every once in a while we'll get just like a nasty thing in there, and it's funny to see the reactions from my partners, because everyone gets like super defensive, and I'm like, dude, laugh it off. Like, who cares?
Yeah. That's what I'm saying. Exactly. It's going to happen, right?
Yeah. I remember when I missed the field goal. I was a freshman. This is a fun story. So first time away from home, I'm in Oklahoma. I don't know what's going on, right? Like I'm this little 190-pound field goal kicker, and I somehow win the starting job. So I was 18 when I was trying out, 19. I'm kicking at UCLA. It's my first game. Freaking Gary Busey's on the sidelines. You know Gary Busey? Yeah, crazy dude.
Yeah. Literally, yeah.
So like, I'm not a Gary Busey fan, but I'm a big like 80s, early 90s, like Van Damme, Steven Seagal fan, So I'm like, oh my God, Under Siege. And we started talking, right? We started talking, and the dude is a nut, like legit.
Yeah.
And I'm kicking into the net. They have like the kickers like, hey, get the hell out of the way. You're in the corner, right? So we're in the corner, we're kicking into the net. So that's where Gary is over there with me. And we start talking, and I'm like, I should be focusing. This is my first college game ever. ABC, big deal. I'm in the Rose Bowl. And towards the end of the game, I've got to kick an important field goal. And so I go out there, and I'm like, you talk about like stage fright.
Yeah.
Just like I black out. Kick it, it goes in, thank God.
Nice.
Come off the sidelines. Yeah, it's through. I mean, I could have shanked it. I mean, seriously, that's how nervous I was. So much energy going through me at that moment. But I come off the sidelines. Gary's like, hey, let's get the fans going in the game. So he's like, let's grab these footballs and start punting them into the stands.
What the hell?
I'm like, what the shit? Are you kidding me, Gary? And, he's like, all right, on three. And I'm like, oh my God, like I'm going to get kicked off the team. Like this, because the kickers have these certain balls in their nets, right?
Yeah.
Anyway, he pulls a prank on me. He doesn't do it.
Are you serious?
No, he was like, oh no, it's probably not a good idea. Like, he can't move very well too. He's been in like accidents and stuff.
Yeah.
My punt, I was like, man, if I punt this ball, it's gonna go like, it'll probably hurt somebody.
Yeah.
But anyway, what I was trying to get to, and I got derailed, was it's funny how life works. I played an away game at Missouri when Missouri was good. They had like Brad Smith as the quarterback. You probably don't remember this, but I remember all these fun games. And I kicked a game-winning field goal. I win Big 12 Special Teams Player of the Week.
Nice.
Front page paper, ESPN, top 10, whatever, blah 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 blah. I'm in my own world. I'm 19. I'm gonna like go hang out with my friends, play video games, whatever. Next week we play OU. It's college game day. They're number 1, number 2 in the country. We're number 11. We're a state rival. Game comes down to a kick. I got to kick a 50-yarder to tie the game and miss it by 2 yards. And next day on campus, like, this guy's a fucking bum. Like, front page of the paper, me with like bawling my eyes out, like, and I'm sitting in class because I'm I feel like I'm in good shape, but I'm compared to like my football dudes, like I'm small. I'm sitting there in class and people are like, man, that kicker, like, what a piece of shit, like, terrible, right?
Damn.
And I'm like, man, and that's life though, right? Like, you have to be able to take the ups and downs, and like, just literally, those people don't know me, and if they did, they would probably never say that, but it's easy to look from the sidelines and judge.
Totally.
And they don't know all the pain and all the work that we went through to get to that place, right? So whenever I see criticism, I just have to laugh.
Yeah.
Like, thank God I wasn't during like the Twitter age. I would have been roasted.
Yeah.
Freaking roasted.
Well, it's a freaking 50-yard field goal. Come on, man.
But even then, like, if you can't make a mistake as a kicker now. That's the funny part.
I actually thought about this like a couple months ago. Like, I feel like being a kicker is actually one of the hardest roles. Like, there is this like weird deal where the some of the people are like, oh, that's the kicker.
Yeah, no,
and you
totally
get all the pressure.
Yeah.
You get one kick. Like, I think that's probably good for keeping you like mentally strong to go through all that.
Honestly, it's been challenging after college to like find that same rush. Like, I don't get it. Like, and I miss that. Because there's nothing like that feeling of like going out there and just being like, okay, it's win or lose.
Yeah.
Like, and that moment's heavy and it's fun and you want to have it and you want to be the guy where the game comes down to you. But no, man, life's funny. You just have to enjoy and overcome the adversity and put in the work. But it's, everyone wanted my job during the week. Everybody, like, oh man, I don't want to practice. Like, kickers off there kicking, like, it looks like a good job. But fourth quarter, 30 seconds left, no one looks at me. I guarantee you, like, and I know this because life slows down in those really weird moments. I'm sure you guys have had some of those moments in your life, and you see people look at you. Like, some people can't even look at me. Like, my linemen, some of them are just like in the huddle, they're just like, I don't want to look because I don't want his job.
Yeah.
And like, that's just, so I always used to make the statement, like, when people would give me a hard time, I'm like, I'll tap your shoulder for the last kick of the game. And they're like, okay, never mind, I'll leave you alone. Yeah. Because I definitely don't want your job in the last second.
Yeah, that's awesome, man. I love hearing that story.
Yeah.
All right. Well, before we get out of here, is there anything you want to touch on? Anything you think that else is important? Yeah,
we're look. I mean, we're pre-launching the fund. We've got some soft commitments now. If you want to just learn about us, again, I'm happy to talk to you individually. I put out a lot of free content. We run a Chicago blockchain meetup. We've got a podcast. I've been on other podcasts. We've got tons of educational stuff on this.
Nice.
And I'm happy to dig into the details, The website is libertyfund.io. So libertyfund.io. We're going to launch next month, and we're super excited to see what the results are going to be. We've got a lot of people that have come and expressed interest, and it'll be just on a first come, first served basis, right? So we're going to have a limited set of investors, and once we hit our mark, that'll be it.
Nice.
But no hard sell, whatever. If you want to just learn or just interested in general, just reach out to me.
Sweet.
So you can reach me at jason@libertyfund.io.
Right on, man. Last
Thanks for having me,
One more
man.
question. One more
Yeah.
question.
What do you
So, young entrepreneurs,
Yeah.
what's your advice? Like someone, even for yourself, looking back, like we got a lot of people listening that are just getting started, or maybe even even advice for us. Like, what do you find valuable? What would you tell yourself? Like, what are general thoughts that you say, hey, this is what's really important?
It's not about the money early. It's about the experience. I really did not. I got my education by going and working for just a tyrant, but I managed a huge portfolio in Texas and Oklahoma as a young kid. I was managing like, $300 million worth of assets with a brand new team. That experience was invaluable. It wasn't the best job. I knew I wasn't going to be there long, but just getting that level of experience where you're working with people, you're trying to do new developments, you're trying to buy properties. Like, dude, that accelerated my growth. And then for me, it's like just education and learn. If you don't like to read, that's cool. Go on YouTube, listen to audiobooks. I opened up my mind by like learning other greats. Like I try to mimic what others do. Like whenever I was playing football, I wanted to watch, how does Jerry Rice practice? What's his approach to his week? What is he eating? What is he doing that makes him so much better than everyone else? And find someone that's doing what you want to do. Go hang out with them. Call Matt up and be like, dude, I love what you're doing. Like, what can I do to add value for you? And it may not, honestly, some people may not have money for you, but that experience is everything.
Right.
Because like I was broke at mid-20s, right? And I didn't know what I was doing. I had some real estate experience, but I was still figuring out life. And my net worth exploded whenever I kind of got that exposure.
Nice.
And I was able to invest in real estate and kind of just continue to grow and develop and be around smarter people than you. Got to be around smarter people than you. If you're the smartest person in the room, you're not trying hard enough at that early age.
Right. Love it, man. Great advice.
Yeah.
All right. Well, that is it. Thank you guys for tuning into the Real Estate Podcast. Jason.
Cool. Thanks, fellas. It's a pleasure, man. Keep up the good work.
Yeah, we will. We'll keep hustling. Guys, hit us with some comments, questions for Jason. Reach out, like, share. Appreciate you guys. Much love. Thanks.
Thanks.